While the chip war is definitely heating up, we're seeing some interesting things taking place as of today. Now, we all know Nvidia is head and shoulders and well ahead of the competitors, but there's some things taking place underneath that we can't ignore. Over the last few trading days, we watched Intel skyrocket 23.5% in 5 trading days. In those same 5 trading days, AMD was up 5%, and Nvidia was pushing 7% in that same week. So what is going on? In this video, what I want to do is get a price target for AMD, but I also wanted to point out a few things taking place. Now, I think most of us know Intel has been an ugly story over the last 5 years. They were fat and happy and innovation passed them by with the largest boom ahead while losing market share to companies like AMD and Nvidia. If you've been subscribed to the channel, we actually started accumulating a little bit of Intel around $19 a share. And in this recent spike, we did sell a little bit off. I wasn't sure what was going on until I looked through today's news. Multiple things we're waiting for on Intel. Are they going to hire a new CEO? Are they going to merge with another company? Are they going to spin off their divisions? But on top of that, Intel is starting to take off the gloves here, stating that rival brands of AMD and Nvidia in Intel's product safety report of 2024 claims that AMD and Nvidia products have significantly higher number of security vulnerabilities compared to its offerings. That's a pretty bold statement. The report alleges that AMD has over 4 times more fireware vulnerability, while Nvidia has 80% more GPU security issues. And we all know security is a key factor to a lot of these companies and is a main reason why Intel could possibly survive. Domestic chip fabrication is possibly the most important thing we're looking for going forward when it comes down to AI development within our country. On top of that, Intel's rumored Celestial GPUs could finally give Nvidia and AMD cause for concern. Now, here is where this gets interesting. This product is most likely going to launch in 2026, and the advantage that Intel has over AMD and Nvidia is the fabrication is done in-house, which means that there is no backlog, they don't have to wait, and they can get the product to market faster than anybody. If these security issues are a real thing, Intel could definitely be a player in 2026, and maybe the stock is starting to price that in. Over the last year, AMD is down 34% and could be presenting a buying opportunity. As we look at the forward PE trading at nearly 24 times earnings, this may be one of the best deals when we talk about AI. Most analysts believe that they can grow over 20% over the next few years, while earnings per share should skyrocket as efficiencies pick up within their business. Meaning, if they can execute in 2025, we could be looking at a very undervalued stock as we get into 2026 and 2027, growing over 20% and only trading at 18, 19 times earnings. When we take a look at forecasts, we have a low of 110 and a high of 250. It's basically trading at its low for most analysts' expectations. When I bring it over to Schwab and Morningstar, Schwab gives it a D rating, and this was recently done as Morningstar gives it a 4-star rating with a narrow moat and fair market value sitting around $140 a share. We're going to review their quarterly report, we're going to plug in our numbers, and we're going to get an ideal stock price for AMD after the sell-off. Right off the bat, fourth quarter revenue was a record $7.7 billion and gross margins were sitting at 51%. For full year 2024, AMD recorded record revenue of $25.8 billion. In the quarter was a record $3.9 billion, up 69%. And for 2024, data center revenue was a record $12.6 billion, an increase of 94%. Now, the art of investing here is deciding if gaming can re-accelerate with the sustainable growth of data centers. If this is the case, then AMD could be tremendously undervalued. We're seeing why AMD has had a pretty substantial hit of 34% down in 1 year. It's because when we're looking at their growth rates of over 24% and they do 14%, there's a readjustment on future growth rates, and so the stock price gets readjusted on those growth rates. But the thing is they got hammered by gaming pretty substantially here. And if gaming normalize and or show some significant growth with data centers still growing, I could see AMD accelerating revenues of over 20%, which is what a lot of analysts are projecting here. So with that being said, I'm definitely going to build just a little bit of safety here, saying that they're going to grow 19% over the next 3 years. From 3 years through 6 years, I'm saying they're going to grow around 12%, and from 6 through 10, I'm saying they're going to grow around 6%. We're watching margin expansion with them as well, so I'm saying they're going to do around 22% margins, 25% margins, and 27% EBITDA margins. I'm putting a double-digit required rate of return in this, and I get an ideal stock price sitting around $103 a share. From a free cash flow standpoint, we're looking at $75 a share, but with a high-growth company like this that hasn't matured yet, I definitely lean more on the EBITDA. Now, currently AMD trades for a 22 multiple. I brought the multiple down because industry standard sitting at 16 times, but Nvidia trades at 40 times. So we could keep their 22 multiple on that as well. And that actually brings it at a buy right now at $113. The reason why I'm bringing the multiple down is I think competition is picking up, and I think the growth rate's going to slow down, which means we could see a little bit of multiple compression. And so I was building that into my model and giving myself a little bit of safety here, and that puts me around $103 a share and $75 from a free cash flow standpoint. So if you believe AMD is going to grow over 19% and they're going to maintain that multiple going forward, demanding that premium, then I think it's a buy right now. For me personally, I would need it to fall another 7 to 10%, and I think it's a good long-term buy at those levels. As always, this is just my opinion, and we will see you all in the next one.